It's that time in the quarter again. HIMSS reported earnings and the stock is now down in the pre-market to about $55 a share. Might be moving around if you're watching this after the market opens. Now, that might feel like a big drop down to $55 a share, but number one, HIMSS very seldom doesn't move on earnings and the market is often very harsh. I remember when they reported for the full year some absolutely outstanding results back in February. The stock crashed 25% or something like that on the most beautiful earnings ever. So the market is often not very giving when it comes to HIMSS quarterly results. However, even though HIMSS beat on their own guidance, they missed on analysts' quarterly revenue estimates for the very first time. So down to $55 a share. It may feel low, but it's really not. If you have a look at HIMSS stock right now, it's trading near all-time highs, and just 6 months ago, $40 a share would have considered to be very, very high. Now, this is the biggest positive. They have reaffirmed that long-term revenue guidance of $6.5 billion in revenue for 2030. And 2030 is only now 5 years away. Now, if you think about that maths, if HIMSS continues to grow nicely in an organic way, this maths looks really, really good. If you take that 6.5 billion in revenue and I've applied an 8 times sales to it, right? This is just an example. 8 times sales, quite appropriate. I imagine by that point, HIMSS will have its operating leverage. Sales and marketing as a percentage of revenue will be reduced. And they'll still have their long-term mid-70s gross margins growing at a nice clip. So 8 times sales, definitely appropriate. They trade at higher than that at the moment. That would give it a $52 billion market cap. And they're currently at 13 billion market cap. So that would be a 4x from here. A 4x in 5 years does not sound like a bad investment. So really, really positive that they reiterated that long-term guidance. Now, what wasn't so positive, the revenue miss by analysts, maybe not so much of a big deal because we've had all this drama with GLP-1. That's been making up a massive part of revenue as of recently. And of course, that is going to cause some variance in analyst estimates, and there's a lot which they cannot get color on a granular level. However, what I didn't like, for the past 2 quarters in a row, we have had revenue broken down into GLP-1 revenue and non-GLP-1 revenue, right? And what I can conclude by minusing the GLP-1 revenue from the total revenue is we have had a flat quarter on quarter for non-GLP-1 revenue, actually ticking down by $1.2 million. Now, the reason why that bugs me so much is I remember in the Q2 2024 earnings, there was a re-acceleration in core because they had to spell it out, because the analysts were starting to think, okay, how much of this revenue growth is coming from GLP-1? And by that point, they'd only been doing GLP-1 for half of the quarter. But I remember they spelled out 46% growth in core, or they said excluding GLP-1. And now in just 1 year, at least that quarter-on-quarter growth is flat. On a year-on-year basis, it's probably somewhere in the teens. But that's definitely not what I like to see, particularly when you consider the total addressable market of some of these core products. The fact that HIMSS, they're operating in the United States, a population of 340 million, and they've got just 2.2 million subscribers, probably a few 100,000 on each one of these core treatments. And when you aggregate that all together, the growth is flat quarter on quarter. That's not what I want to see. I want to see a minimum of 20% annual growth in the core. And that's what they said on the last quarter. They said, we're still growing core 30%. I thought, okay. However, quarter on quarter it's flat. And they didn't give a lot of color on when that acceleration would be. And it is starting to feel a little bit like HIMSS is aggressively going after so many new opportunities, but unfortunately, at least in the short term, it seems like the well is a little bit dry on that quarterly growth. So I really didn't like that. we did see net new subscribers increase, albeit by only 73,000. And I mean, that's significant because they had a lot of complication with rerouting and changing memberships, particularly with the very brief Novo Nordisk deal. That resulted in somewhat of subscriber disruption. And I think we have to give Hims a little bit of slack here because of how steadily that they've grown these subscribers. Of course, they had a massive GLP-1 tailwind, and given that now they've got this GLP-1 headwind, the results are certainly not as dire as what a lot of people would have thought. So they have reported, when you add up the total revenue for the first 2 quarters, 1,131 million, and they're forecasting in the midpoint 580 million for Q3. That brings us to 1,711 million, minus that from the midpoint of the full year guidance, and we get 639 million in revenue for the 4th quarter. So there's an increase there. And of course, the full year guidance of 2.3 to 2.4 was reiterated. So that's incredibly positive. And I think the key theme here is Hims are obviously going after a lot of new growth opportunities, but they really have to prove themselves, because seeing this core dry up is really not fantastic. On a yearly basis, the subscribers still grew 31%. And what we have to remember is Hims are working on a lot of things to re-accelerate that subscriber growth significantly. They talked a lot about geographic expansion in the quarter, which, you know, that is going to unlock a huge amount of total addressable market. And it also just diversifies the regulatory risk a little bit. They're not constantly hanging on what the FDA has to say. Different countries have different regulations, so that will definitely decrease the volatility of revenue and just the fact that things could change with a drop of the hat because of the FDA. So that's very positive. And the hormonal segment that they are looking at and actually plan to launch in very soon, incredibly interesting stuff. Testosterone and menopause, huge market. They've really segued the calls much more towards this idea around precision medicine, which I like. Of course, Hims is all about easy healthcare, but now actually signaling towards preventative healthcare and longevity, I really, really like. Now, however, all of this has not shown up in the numbers yet because they're still working on this from behind the scenes. And what you are really betting on when you're investing in Hims at this pivotal transition point, you're betting on the founder. You're betting on the management team, the efficiency and the properties within this company that make it special, and the business model that allows for that. And it's very much one of those quarters where you're not betting on it quantitatively from the numbers. And this has resulted in me concluding that it's a good time to reduce a bit of my Hims position, because it's a very large holding of mine, as I've stated on this channel, and the share price is still very high compared to historics at the moment. Because we're in this situation where we're actually, as I said, betting on the human capital, which I don't have no doubt in my mind, what Andrew Dudum has done is incredible. Founding this company in 2017, growing it to where it is today, the speed at which they captured very large segments of that GLP-1 market. I think people forget just how efficient they were with that. And now they've got all of these new verticals that they're working on. Absolutely fantastic. But the bet that you're making here, if you trim your position, is that you're betting on the fact that the market will stay with the growth funnels which are still being worked on behind the scenes, and not actually looking at where we are today. It's one thing saying, yes, this is not a GLP-1 company, and it's absolutely not. And Hims have done incredibly well actually looking at these new verticals with Zava, Tribe Labs, obviously all of the international expansion, the blood testing. You know, they're really, really looking at that very carefully. And it's great that they did that before this whole GLP-1 thing, effectively, that the hype died down, right? what you're betting on if you sell is you're betting on the market actually being harsh on HIMS, and the market actually not sticking with just the management working on things behind the scenes. And the thing that I often go back to is you go back and you look at the share price, right? And the share price has still risen a lot throughout the start of the year. I'll reiterate what I said at the start of the video. We've got to remember that, $63 as of market close and $55 a share in the pre-market is still exceptionally high for this company. And my investment has done very well. My investment is over a 7x from when I bought in 2023 at $8 and about a 4x from when I published my YouTube video in October of 2024 on the stock, which the share price was about $16 a share when I published that video. So the investment has done very, very well. But what you're betting on is you're betting on the fact that if we have a few quarters where the growth rates are actually decelerating, and you never know, like HIMS has reiterated their guidance, right? So they may actually hit that guidance and all will be fine. However, that guidance is now largely priced into the market. And I think the reason why, or one of the main reasons why the stock sold off is HIMS, but because they've had so many blowout quarters, it's almost just like a given. Like the market just expects them to beat by a wide margin. And when they don't, that's when the stock falls. Then again, it's kind of funny that the stock fell only 13% this time and actually fell in the region of 25 to 30% when they had probably their most amazing quarter on record, maybe only beaten by Q4 of 2023 at the end of 2024. That was an absolutely amazing quarter. And going back to looking at the share price, you saw in June of 2024, which then sold off in August, but then got bid up massively at the start of 2025, a whole load of new investors flood in. A lot of that was the institutional money that was looking at HIMS because of GLP-1. And also a lot of new investors that were understanding the complete picture of HIMS, but some of them would maybe not have the full conviction or depth in the thesis to really ride out that massive wave. And we've seen that when the market gets a bit shaky, HIMS sells off a great deal more than the broader market, right? It's a very volatile stock. And my inkling is for the next couple of quarters or so, we may get a situation where HIMS's growth is not so good. That they will be reiterating a lot of very exciting things when they are building their international expansion, when they're building their new verticals in testosterone and menopause, and they're building their precision medicine. And of course, we had the new CTO, come on the call today and explain at least the basics of what is an AI-first approach from HIMS. There'll be a lot of excitement with building that, but I have a feeling that it won't show up so much in the numbers. And for me, that core being flat quarter on quarter is a little bit of an issue given that HIMS share price is not the steal it once was. 12 times gross is not egregiously expensive. What are we at on sales? So turnover, sales. So we're at about 10 times sales, right? 10 times sales, not ridiculous. I really think HIMS could optimize their free cash flow margins in the long term at 20%. But then again, even if they optimize it at 20%, we're trading at a price to free cash flow, at least on a trailing basis, of $50 per share. And given that I've now seen that quarter on quarter revenue stagnate from the core, it makes me a bit concerned with the level of percentage allocation I have within HIMS at the current market price. As I said, I am massively impressed with the management team and what they've been able to do and how fast they're scaling, but I think the market, it may underestimate how quickly HIMS can actually synergize these approaches and generate meaningful revenue, particularly when they're doing it cross-border in many different places. This is an organization that's really going to have to get its act together to massively grow these new verticals. However, as I said, I am trimming my position. I am not selling my position. This does not mean that the HIMS thesis is over for me. I am a quantitative man and a quantitative investor. And when I see share price go up and the near term that, yeah, we may see, I reckon, probably 3 or 4 quarters of headwinds that may spook some of those new investors that came into HIMS in the last 6 months. That's my point. And it's going back from, oh wow, these numbers are absolutely fantastic, to, look, this is a transition quarter. What we're working on in the future is fantastic and could work. And I have a high degree of conviction that the management team will deploy those new business areas successfully. However, the flip side of that is, you know, they may see some continued pain on the core side. And I noticed it was interesting because they, for a couple of quarters, they didn't break out the core. They said it's still growing 30% year on year. And now we can actually see that it's at least flat on the quarter. And as I said, sometimes you have to look at these things and say, wow, the risk reward is not quite as good as it once was. I took some chips off the table, actually around the share price, around $60 in February. And $60 now doesn't feel that expensive, but at $60 per share in February, and it was going up like a rocket, 10, 20% every day, it felt really, really high. Now it doesn't feel so high anymore. But quantitatively, $60 today is not that much cheaper than $60 6 months ago, because only so much from the company has changed. But just remember the long-term bulls on HIMS. If they hit that guidance, things look very promising. It's just what they have been doing in America seems to, at least on a quarterly basis, be stagnating, and it'd be really great to get that breakdown on an ongoing basis. And it's all about the conviction in the management team to deploy these new businesses.